So in brief, Apex is a business I set up 21 years ago. 2 people in an office in Bermuda. Now we're 13,000 across 51 countries. We're the leading alternative asset servicer, and alternative assets is what I think is the hotter asset class. And you can debate whether investing into stock markets or alternatives produces better returns. But my focus is really on the alternative side. And we have clients which are the leading alternative asset managers. So your BlackRocks, your KKRs, Carlyles, etc. So we see what's going on in terms of investing around the world and what products they're coming forward with. And we also see where it's easier to raise capital. And I think certainly being in India is a very fortunate place to be. The macro effect you have, everyone's excited about the growth of India. But that, I think, when you combine that with the corridor of the UAE and Saudi, is really where a lot of the world's growth is going to be generated from. So we're seeing a lot of interest to inbound invest into India, as well as the UAE and Saudi, but also to be able to raise capital, particularly in the UAE and Saudi. And that's what we're really helping our clients facilitate with our full sets of solutions in those markets. So very positive on India. I think very positive particularly on Gift City and what that's going to be. I think I was at a round table with Modi in January and predicted that it'll be a top 10 financial jurisdiction globally in 10 years' time. So that's going to be a very powerful statement to see all the inbound into India and outbound from India investing globally going through that market. I'll also touch on the types of asset classes which we're seeing are being really attractive. So for us, it's about private equity, private debt, real estate, infrastructure, venture capital. A lot of venture capital is thriving here in India, it's thriving in the Middle East. It's tech-focused venture capital as well, green tech, also food security and those other aspects too are also very hot asset classes that people are investing in. So they're the key themes we see around the world as to what's growing, what people are able to attract capital into from a product point of view. And obviously they need to be able to structure them in a way which is attractive to investors. And the structuring piece can be difficult. So some people think that going for a jurisdiction which is inexpensive, like the BVI, is the right place to structure a product. I don't agree with that one bit. You've got to have the right jurisdiction. So if it's in India, it's an onshore AIF, it's a gift city structure. If it's to attract Middle East money, it's in AGGM, it's in DIFC, it's in CMA in Saudi. And then if you're US money, it's in Delaware. Less so Cayman, and then Europe, it's primarily Luxembourg. So you've got to get the right structuring for your vehicles if you're looking to be really collecting the capital you deserve. And I hear a lot of people with great products, great ideas, and where they're going to invest their money without connecting the fact that actually where's the money coming from in the first place. So that's an important part to it, is actually making sure you get the structure right. You're thinking about where the capital's coming from, what types of investors are going to be key for you, and then you'll be successful. And clearly Apex has got a role in that, being in 51 countries, and being able to facilitate those structurings for you as well as the ongoing reporting. I'd also like to just touch on what we're seeing digitally. So everyone's talking about tokenization. What does that mean? I'll give you a use case for tokenization. We took a Hamilton Lane fund in Luxembourg. It was $1 million subscription. And not everyone could afford $1 million to subscribe into a Hamilton Lane fund. So what they did was they said, actually, let's put it onto blockchain and then make it $1,000. And then I would hope everyone in this room could then invest into that product, which they wouldn't be able to invest into had it not happened and been put on chain. So really that's the theme that we're working on at Apex, is to make sure that we can make what was previously uninvestable, investable. And if you think about that, that's private equity, private debt, real estate, infrastructure, VC. So we're taking it down to, say, $10,000 to be invested into those asset classes. You have to get your liquidity out quarterly, not locked in for 7 to 10 years, and you can value them more frequently. And I think that will be transformative. And we're beginning to see that happen with feeder fund structures at the moment, where people can feed into your KKRs and Carlyles and these large successful GPs with smaller ticket sizes. But if you can go direct with on-chain tokenized form, then you can actually pivot very quickly. If you say, well, actually, I don't like Carlyle fund, tomorrow I'm going to put it into a KKR fund, you can switch it out potentially the next day. And that's incredibly valuable, rather than being locked in with a big ticket size for 7 to 10 years. So this is what I think is going to transform how everyone can invest. Instead of having a portfolio like I do and most people do, where you have a bit of long only and a bit of fixed income, and that's a balanced portfolio, you can have a portfolio with every asset class in it. And that, for me, will give you a better return with lower volatility than the way funds are currently structured, or retirement's currently structured. Just a quick show of hands. See who's still paying attention. Quick show of hands, who's got a crypto wallet? Who's got a digital wallet? So we're looking around the room. It's maybe 5%. Did you know in the US, 50 million people have got crypto wallets? It's a huge number. And what I think will happen is actually when you digitize investing into private markets assets, they will end up being held in a digital wallet form, and people will be retiring with a digital wallet of illiquid investments, liquid investments which were previously illiquid. And I think that is going to make a massive difference for everyone to be able to get proper security when they retire. Actually, if you think about a private equity fund, that's got a 25% IRR, mostly, with low volatility. If you put those into your portfolios, you're going to have much more certainty of your future wealth. And I think that's going to be really valuable. The other aspects we're seeing around tokenization, people are tokenizing money market funds. And I didn't really understand that at the start, but they're using that to then borrow against the tokens as collateral. So it's a way of actually you being invested, staying invested, being able to get liquidity to do other things as well. And I think that's a pretty useful use case. And you think about Fidelities are doing that, the Vanguards are doing that, all the largest asset managers are doing that. I'm not sure if Indian asset managers are doing that yet, but it's going to come here soon. I think it's going to be very valuable in the financial ecosystem. So there's a big theme with that as well. And I think certainly the world is going to change very dramatically in terms of how people can get access to products which were previously just for the big institutions. And I think that liquidity aspect of it will also, in time, mean that these assets become retail. The reason why you can't have a private equity fund as being a retail product is because regulators don't like it, because it's a high ticker size, it's illiquid, and it's infrequently valued. If you take those three things away, then it's no longer a high-risk asset, and then I think it ultimately will be accessible on the retail side as well. So there's a lot of evolution, a lot of change in terms of how investing is happening into the actual product side. I'm going to talk briefly about the cash side. I think certainly people will no longer be using fiat to buy investment products. They're not. Whether it's stable coins, whether it's digital cash, people are beginning to tokenize deposits in banks. So the actual transformation of how investing will happen, not just from the types of products you can get, but also the way cash is moved to instantly settle into buying these products. And what that means is that we have a concept, or I have a concept called dormant cash, which means you take money out of one product, you redeem it, it sits around for a few weeks, then you put it into another product. But just imagine if you can go seamlessly from one into the next without that cash sitting around not earning any interest or anything, then that's a much better solution for you and the world, in the fact that actually you get return all the time. And that's possible through these tokenized money market funds, or putting it into stable coins with returns in them as well. So again, that's a new evolution that's coming through pretty quickly. And I'm thinking that that's actually how people will be using cash wallets to settle immediately and staying in the market all times. So there's lots of change happening here across the board, and I think it's really important that everyone is ready for it. So ready for it means that us as an asset servicer, we're ready for it, and we're actually able to create our own money market fund, tokenized, and we're able to link up all blockchains and be chain agnostic. So what that means is you're creating markets globally for people to be able to buy secondaries of private markets assets with small ticket sizes on stock exchanges almost now. We're putting a project into the London Stock Exchange where we're putting the tech behind them being able to take private equity funds, make them liquid, make them trade, and that's a project that's going to be ready by next June. So it is all happening quite quickly, and that's going to give everyone a lot more choice as to what they can do and what they can invest into. And I think that's going to be beneficial for everyone. So I don't want to keep talking at you. That's not ideal. So we've got a few minutes left. Maybe I'll just see if anyone's got any quick questions, or else we can move forward to the next speakers. Just one over here. Do we have some microphones? Maybe you can shout your question. We'll wait.
Check, check. Is the mic working?
Hello? Hello?
Yes.
Yeah. How about the Bitcoin? It's rise to 1 lakh US dollars. And what about the future of it? Dogecoin?
The big Bitcoin at $100,000.
Yeah. What is the future of it? Will it be like a currency or?
Well, I think certainly it's not just Bitcoin, it's other coin assets, right? They're on a massive growth piece. I don't think it's going to maintain. It will be cyclical. But I think the trend is that people are talking about the limited supply. I was at Abu Dhabi Finance Week talking about limited supply. There's only going to be, I don't know how many coins left to be created. So once that's done, then you would think another boost will happen. And they're talking about it going to being $1 million at Abu Dhabi Finance Week yesterday. So it's hard to predict, but it won't be a straight line. So just be aware of that. So just over here.
Hello.
Hi, that was very revealing. One of the challenges we face when we live outside India is that it's very difficult to invest into India, but I guess through the systems you're talking about, you can actually make that happen, because the returns that you get in an economy like India is not the same as what you would get in US, for example. So can you kind of create a system through tokenization where it doesn't matter and the returns that you get on your investment are better than what you would get in the West?
I can't give you investment advice around how to invest, but what you can do, I think Gift City is going to be that conduit, personally, which is there to attract the outflow and inflow of capital into India. So I think you can set up structures into Gift City and then invest out in that way. I think that's now possible. I think that's going to be the real angle, is to be able to invest globally and get global returns through products structured in Gift City. Because obviously the stock market here is expensive compared to the US. I think it's almost double right now. So it's a sign of how strong the economy is here. But I think you'll be able to structure it through Gift City would be what my recommendation would be.
Can we have that mic on, please? The mic that is with
Hello.
the... Yes, thank you.
Thank you. I want to ask a question about, you talked about democratizing some of the illiquid investments like private equity and stuff like that. So do you worry that people will not understand the risks before investing in such instruments because they are illiquid, and however much you try to turn something illiquid into liquid, the risks are still there. So how do you balance that? Thank you.
Yes, I think certainly if you look at a public equity, your public equity trades and then it trues up when you have an earnings report, right? So I think the same thing can happen with tokens of private equity funds, where actually the tokens will trade at a premium or a discount to the actual underlying assets in the fund, and then the valuation will come out, and then it'll true up and down. So they don't necessarily need to connect directly into the actual underlying physical investments, but it's based on the quality of the manager, what's in the portfolio, and how it trues up each quarter, and the drivers of that growth. So that's how I think they'll be created. It hasn't been done yet, but that's a way of making sure that you can actually get exposure and performance, but without having the illiquidity.
Are you okay to take one more question, Peter?
I've got time for one or two more, yes.
Okay, awesome. Okay, we have one over here, the gentleman over there. Can someone hand over a mic to him, please? Is there a possibility of someone handing over a mic? Maybe can you quickly run up the stage? I'll give mine. As speakers, we usually don't.
So my question is about startups. So what are the mistakes that most of the startup founders do while raising funds? And they should avoid it while getting funds from any angel investors and from VCs.
So the mistakes are not knowing your audience. So you may have a product, but you need to work out, well, actually, is it applicable for family offices? Is it high net worth? Is it institutional? So you've really got to do your market research on who's going to actually want to invest into your strategy. Have that locked in first before you go ahead. The build it and they will come strategy isn't working at the moment because it's a particularly tough time for asset raising over the last 2 or 3 years. So let's make sure you've got line of sight, certainly on having enough money to get your fund up and running, if it's friends and family money or people you know, or a cornerstone investor. Make sure you have that and making sure it's structured in the right way so that those conversations are a big tick and you don't structure it in a jurisdiction where they don't say, listen, we can't invest into that jurisdiction, or you're not using proper service providers or proper auditors, etc. You've got to make sure you have full set of ticks around the diligence they might do.
Would you mind asking the question off stage? Really sorry, Peter, because we are running behind schedule and we know that you have a flight to catch. Ladies and gentlemen, let's give a huge round of applause to Mr. Peter Hughes. Thank you for sharing your thoughts.